For this example of classwork here, we are given information that relates to Springs Limited, an extract from the statement of comprehensive income. We are given profit before tax of 365,000, and obviously that 365,000 is before tax. So we need either a tax rate or some information that will enable us to calculate income tax for the year. Now, when you look at the notes of the financial statements, they give us trade and other receivables. And for trade and other receivables already, we've got SARS income tax. For last year, it was 20,000. For this year, it is 30,000. Obviously, we don't expect to find any SARS income tax on the trade and other payables. Additional information tells us that our tax rate is calculated at 28%. Remember, we were given profit before tax. So all you have to do once you know the percentage, you will have to say profit before tax is at 100 and your tax rate is at 28%. Now, profit after tax will be 72%. Multiply by what you want, divide by what you've got. Now, for last year, please note that SARS income tax was in trade and other receivables last year. So this year, we will put it without brackets. And then we have to calculate income tax for this year by taking profit before tax, multiplying it by 28 and dividing it by 100 because profit before tax will always be at 100. And then when we have SARS income tax in trade and other receivables at the end of the current year, it means that we overpaid, and that overpayment will be shown as an outflow in your taxation paid note, which is 30,000. In this case, your tax paid will simply be 112,200. Okay. Please pause for like 5 minutes and try this one on your own. Now, for this one, you will have your SARS income tax and trade and other receivables. Let me just check firstly. I am given profit after tax for the year, which is 144. That is profit after tax, and it's given in the retained income note. And then my SARS income tax for last year, it wasn't in trade and other receivables. Therefore, it must be in trade and other payables. And there it is, which is 46,000. Now, when I prepare this, note that I have profit after tax. When I prepare this, last year's amount that was still owed, I'll put it with brackets because last year's house income tax was in trade and other payables. And for this year, when I calculate my income tax, I will simply take the 144, which is at 72%, and multiply it by 28. It'll give me my income tax of 56,000. SARS income tax at the end of the current year was in trade and other receivables. Now it means I overpaid in the current year. I'll only receive it next year. For this year, the overpayment will be shown as an outflow, and we have 30,000. Our taxation paid in this case will be 132,000. All right, try this one out. Pause for 5 minutes and try it out. Here you will note that we were not given any profit at all. Instead, they told us that net profit after tax for the year ended 28th or 29th of February 2021 is 60% of retained income on 1 March 2020. You'll realize that on 1 March 2020, retained income was 600,000. So our net profit after tax will be 60% of 600,000. When you look at the extract from the notes of the financial statements for the year ended 28th of February 2021, in trade and other receivables, we didn't have anything, meaning that both SARS income tax amounts will be in trade and other payables. For last year, it was 46,000, and for this year, it is 35,500. Please note that when we calculate our net profit after tax, we'll simply take the 600,000 times it by 60%. But whatever answer we get there, it is still net profit after tax, meaning that we will still multiply it by 28 and divide it by 72, since our tax rate is given at 28%. It was in trade and other payables last year, so we will show it with brackets, our SARS income tax. So that means that 60% of 600,000 will be 360,000. You will take that multiplied by 28 and divide it by 72. It'll give you your income tax amount of 140,000 for the current year. Now, your income tax, sales income tax for this year, for the current year, was in trade and other payables. That means that we didn't pay any sales income tax for this year. That's why it's an inflow, and it will only be paid in the following financial year. Our sales income tax paid for the year will be 150,500. In the next video, we'll be doing net change in cash and cash equivalent. We'll get to it in the next video. Please check out the next video.